Hello, and you're very welcome to this YouTube Live. My name is Martin. I'm a chartered accountant with almost 20 years' experience working with small to medium sized businesses. 10 of those I've been operating as my own through my own firm. And in this, we're just going to do a weekly recap of what's happened in the week for tax purposes, and of course, any tips that I could give you. So let's set the stage for what needs to happen for last year, and of course, then leading into 2026, we can plan that out a little bit better. And that'll be the purpose of today's video. Hopefully, that's what you take away, exactly the plan for doing this. So as I mentioned, next week, actually this day week, isn't it? The 23rd of January, we have all those VATs is going to be due, and that's as I mentioned, a very expensive time for business owners out there. So to overcome that, I give the impression that you've got money that comes into your bank accounts, and as the money comes into the bank accounts, it's not all for you to spend. And this is what I'm always harping on about, for business owners out there, that every penny or every cent that you get into your business, you're not able to spend it all. You actually have to allocate that out across all the various liabilities that needs to be paid. The number one being VAT, because it's money that you never own. You can't, the only thing you can deduct against that is the purchase VAT that you have on that. So, for argument's sake, we need to make sure that we're able to get this out and put aside so that we can keep that out of reach, but in a way that will make sure that other taxes can be paid as well from this. And I'll give you the example. So we have money coming into your bank account. We'll just say there's 10,000 comes into your bank account in a month. If you allocate 23% of that and put that into a separate bank account on a weekly basis, look at the lodgements coming in, and from that, allocate that and put that into a separate bank account, and have that bank account, not your current bank account that you paid into, have that other bank account linked to revenue to pay all those tax liabilities as they fall due. You will have 23% of what your takings put into that bank account to pay your VAT bills. But the one thing about VAT is we do have a deduction against sales VAT, and that is purchase VAT. So any purchases that you have, you're getting the benefit of reducing that amount. So you're actually saving a few pounds. And the money that you have saved because you're buying throughout your course of doing your business, you're actually buying items. You should have enough money then to pay PAYE, corporation tax, and or income tax, depending on your business. So it's a good structure of starting the ball rolling to make sure that you have allocated money and that not everything coming into your bank account is available for you to spend, because your bank account does lie. I'm always harp on about that as well. Having a good month is one thing, but having a good quarter, that's what I would measure as being. So seeing how much money is left in your bank account at the end of each quarter rather than the end of each week, and make decisions based on that. Anyways, right. So we have allocated. So for 2026, if there was one thing you were to do in January of this year, was to set up a sub account. And there's so many options when it comes to this. Like, business owners that I've been working with have been using the likes of Revolut. Business has really taken off in 2025. And business owners before were afraid to use it because it didn't have an Irish IBAN. But when Revolut got regulated in Ireland here, and we were able to get the Irish IBANs, all of a sudden then it became a legitimate business option for business out there, and a low cost one. So in particular, I've got two clients who are using Revolut sub accounts, and they have that split across a whole load of different items. So as I mentioned, money coming into the bank account, the VAT is being sieved off. They also have a development account that they want to put money into as well. So this is happening on a weekly basis. Money's coming in, is being sieved off in two different directions. There's not, I think there's an overall charge for using the Revolut business account. There is a monthly charge on it, but it's nowhere near the traditional Irish banks that we have. So separation of the money coming out, and that means that money is available. If you see what's left in your operating account at the end of the month, that's exactly what you have to run your business on. You can't dip into your VAT. You can't dip into the future fund that you have that you want to be able to, for development of the business. If you have a capital amount of capital that you want to put aside, you know that you're going to need this in 5 years' time. Having money allocated for that is a good way of building, rather than having to take loans out for all this sort of stuff. Anyways, Revolut, Bunk, there's a whole load, N26, there's a whole lot of online options that business owners can use, and they're extremely, extremely good. Like, they're excellent at the minute. But saying that, if you are using a traditional bank, open up a tax account, one separate account. Okay, of course, I get get told that the additional fees and that, but the fees that you would incur having a separate tax account outweigh the stress in your own mind of not having the monies available to pay these liabilities. So having at a minimum two bank accounts in your business will mean that you will overcome that and being able to put across some funds so that when these tax liabilities fall due. And as I mentioned, January is a horrendous month. If you are operating out of one bank account, come the end of this month, you're going to see a lot of money leaving your bank account if you're registered for VAT and POIE. You're going to see a substantial drop in the funds that you have available for this. So, and we have the additional costs. So let's move on. So 2026, we have auto enrollment kicking in. We also had an increase in the minimum wage. So all these have knock-on effects for businesses going forward. So not being able to making decisions based on the figures that you had in your account in December coming into January, whether that would be staff increases, whether that would be whether we need to hire a new employee, or do we need to pivot and move into a different direction based on how much you had in your bank account, isn't a great way of doing it, because you'd be better off waiting until the end of January and making your decisions then on those key decisions that you need to make in your business, especially when it comes to adding additional costs to it. So pre-January 2026, I would have focused on well, when I was speaking to clients, to make sure that they were actually planning for this, because we have the increase in the audit for the costs, payroll costs, including the minimum wage and the auto enrollment. But as well as that, coming in July, we also have the drop in the VAT for any hospitality businesses out there. So putting prices up now or pre-Christmas to get the boost in the sales was one thing, but after that, it was to maintain that sales. So come January or come July, when the VAT rate drops down, we'll be able to increase the margins substantially, hopefully, anyways. And that is the goal. As long as costs don't increase beyond what we can expect, because we want to maintain our margins. And business owners, especially in hospitality, are finding it extremely difficult. So if you want to know what a good rule of thumb when it comes to wage percentages and wage percentages, especially in hospitality, I'll give you some examples, because I would work traditionally in hospitality businesses, and I have a number of them on that I do accounts for at the moment. Right, high-end services. So where you are table service, white cloth, it's upper end. You're talking about anywhere up to 40% is going to be your wage percentage that you could expect for a business like that. So if you go in and there is white tablecloths on the tables, the prices are a little bit higher, but the wage percentages for these type of businesses is high. Right, we'll take it to the other side. I walk down the main street and I see an insomnia, a huge insomnia in the middle of a town, and they'll have two members of staff behind the counter. And I think, how in God's name can they run a cafe of this size with two members of staff? And the reason is because it's all cooked there. It's all in the cherry chef items, handing people out what they are. They're not actually, they don't need to be hand serviced. They're not going to people's tables. They're not taking orders. It's all done at the till, and it can be ran by two people. A wage percentage on a business like that could be anywhere between 19 and 25%. So the less amount of staff that you have on the floor, bottom line. But if you can then implement that across, because businesses are focused on wages all the time, like wage costs are probably the highest cost you have for majority of businesses out there. Once you start hiring people, wage costs are they're the ones that really stick, because they only go one way, and that's up all the time. So having a good understanding of the margins, so a KPI for a lot of businesses out there is that wage percentages for that. And for 2026, at the moment, if you increase your prices before the end of last year, you maintain your prices up as far as July of this year, and then you'll have the added benefit when the VAT rate drops, that you're going to increase hopefully your margin, the bottom line, for the second half of the year. And that's what you'd be hoping for coming into 2026 for that, as long as I mentioned, your costs don't outweigh or erode that margin that you can potentially get. So the format for this is to this type of a show, or this type of a live, is to answer people's questions. So one thing that I'm asking for is that if you have any questions that you want to ask an accountant, you don't know where to turn to, you have a question, a quick question, I don't know, a complicated question that you just want me to give you some guidance on, that's what this format will be for. So I'm hoping to run these type of sessions every Friday for the foreseeable, see what the traction is like on it. People like it, great. If they don't, we'll have to pivot and help people in another way. But that's the goal for this type of format. So for now, I think that's. Did I get any questions coming in? There's a few say hellos. Hello, hello. A few people watching. I'm surprised people are watching an accountant talking about accountancy things. Oh, I know it does be fun. Right, I'll go through some key deadlines that we have here before I finish up, because for 2026, as again I said, the January ones are the main ones. There are some revenue updates from the on several for pension manuals. Okay, towards the end of last year, there was a rush for businesses in order to get company pensions set up in time to avoid the auto enrollment, and that will have a knock-on effect this quarter, especially in 2026. A lot of businesses will still be looking to set up their own pension because they want to take people out of the auto enrollment, and anyone who sells pensions are going to be extremely busy in this regard. So there will be a lot of rule changes when it comes to especially the transfer of pensions, transfer of payments, transfer of occupational pensions, because there are employees who may be on your books, there should be or there could be, who have pensions that they're paying into themselves privately, but they don't fall under the remit of this auto enrollment because it goes on the payroll taxes alone. So if it's not on the payroll, it's not on your payslip, you're being put into it. And of course, that means that it's going to have an additional cost, a small cost initially for business owners out there, but depending on your business, you could have a serious, significant impact to your bottom line overall, especially with the increase in the minimum wage if you are running a sort of a retail business or businesses where the margins are quite small. So there's going to be a lot of movement around that. Also, we have VAT modernization is something that's coming down the line for any business owners just to be aware of. So if you're not running a VAT, if you're not doing VAT or sending invoices through a piece of software like a Xero or QuickBooks, you're sending the manual through PDF. All businesses will be required in the next few years to have a system in place because all sales invoices will be fed into revenue, a bit like downloading RPNs for employees, that we get an update exactly of what the tax credits are for every employee that you have. So this is coming down the line. It's penciled in for let me just see, modernization. Okay, so the deadline for to complete the large so it's still in the consultation stage, so it's going to be called e-invoicing, and it actually finishes today. The initial large corporate divisions are going to be sending through their queries and their inputs into this about what's going to happen for the LCD and those for the tax VAT registration. And this is going to mean that for businesses who operate across Ireland and across the EU, moving the VAT is going to be tracked basically. So there'll be no more in real time. You'll have to declare your VAT returns, absolutely, but in real time you're going to the revenue will have an idea of exactly how much you owe to revenue. So it's a good time now to start putting the system in place to capture that VAT, to make sure you have to pay it over when it does fall due. Right, I think I've rambled on long enough for one of these. So I hope you got some information over it. Oh, excuse me. I hope you got some information that is of benefit to you. And again, if you have any questions, just send me a list of comment down below if there's anything in particular you want me to discuss or go into a little bit more depth in. Okay, until the next time.